next hour is going to be straight sauce of trading content from intermediate all the way to expert level. I'll be honest, the rest of the video won't be edited. It will basically be me dumping information on you. So if you're not able to watch the rest of the video without me fucking your brain with these like edits, then I don't think trading is for you. Timestamps are below, so switch to wherever you're comfortable with and join the free Discord, link in description. Like I said, once we hit 1K on Instagram, I'm going to make a free course where I just brained up my information. I'm going to get straight to the point and everything. So yeah, this is the beginner section. Okay, so the first thing I want to talk about is how do you enter the market? How do you actually go into a trade? All right, so of course there's demo trading, and a good app to demo trade is MetaTrader 4 or MetaTrader 5. Just go onto it and just create an account, and it says demo. Make sure you choose demo. But the thing is, you're not going to make real money from that, okay? It's more for practice. You enter the market as practice, all right? The way that you actually enter a market is using a broker. And basically, it's like, you know how in dropshipping, you are selling something to a consumer, but you have to go through somebody else to get the products because you don't have the inventory on hand? It's kind of like that. You're going through a middleman to get the entries into the market. So don't like put 100% trust into me, okay? Just do your own due diligence. But if you go on to TradingView, there's a broker section, and these are all the kind of trustworthy brokers. Okay, so I use Oanda. Interactive Brokers is really good too. Forex.com is really good too. But the thing is, what you have to also know is that brokers take fees. Okay, so or some of them do, right? When you enter into a trade, let's say I go into Euro USD, and I'll go into depth in these later. But let's say I go into Euro USD and I try to make a trade. Let's say I say it's gonna go up here, okay? But I'm just like guessing, go up. Once I enter it, I have to pay a fee, and then it's gonna go up. So you most likely don't want to be paying these fees. So that's why you have to be careful with what broker you're using, right? Because some of them have fees. I'm not sure which one of them does, but I know Oanda has no fees at all. If you click learn more, you get to know about it. So minimum deposit value, that means like how much you actually need in your account to like it be functional. Zero minimum deposit, like you don't need a deposit at all. The thing is, with $0, you're not gonna be able to trade, but you don't need to have money on it. 1 to 50 leverage. This is US regulated. Okay, so you can always go for a you can always go for a broker that isn't US regulated. Most of the time they're kind of like fishy, dodgy. They're gonna run off with your money. But if you find like a real legit US regulated, not US regulated trading platform, you can get 1 to like 1,000 leverage, right? Or 1 to 100 leverage. And basically that means is like for every dollar, TradingView will roughly put in 50. Or not TradingView, the Oanda will roughly put in 50. So it just increases the value of that one singular trade. Okay, meaning that you are able to get more money like from your trades. You are able to make more money, but you're also able to lose a lot more too. So it's kind of a double-edged sword. Either you're making a lot of money and you're able to do these crazy turns, like turn $10 into like 1,000, not in a day, of course, not in a single trade, but you're able to get there faster. 1 to 50 is going to be a little slower. But the thing is, the brokers that are offering 1 to 50, they're more regulated and trusted. So you have to find one that is for you, okay? You have to find one that you trust and do your own research, because I don't want to give you guys like a broker that maybe they're going to scam you in the future, right? I don't want to take liability for that. So take like personally, I use Oanda. It's trustworthy. It has great reviews, 20.6k ratings, and 4.5 stars. That's amazing. Basically, they have no commissions, so you don't have to pay them money for anything. The thing is, there is some fees for forex and some indices as well as commodities. And oops, basically I'll go over this later, what a pip is and stuff. But yeah, you'll see this later. But yeah, you have to pay a little bit fees. It's like you don't have commission like the traditional way, but it's kind of built into the trade. Okay, yeah, that's it for brokers. Let's hop onto the markets. Okay, so basically each one of these little boxy thingies is called a candle. Okay, they're called candles. You can switch it to be like this, like what you usually see in the movies, but the candles give you a lot more information, so I stick with the candles. Okay, so we look at the candle, and what do we see? It's a box, either black or green, but it's gonna vary. For you, most likely it's gonna be red or green. So it's a box that contains different colors. It has a big stick, and it has a big stick here. So what does this mean? Well, I made a video about this before, but just to recap, it's the color. The color is the direction it's going towards. So for me, I said it black is going down and green is going up. This long line, these lines represent where the price has been before. So if we go to it right now, oh wow, it's actually going up. Do you see how we start from here and just slowly moving up like that? Like, let's hop onto the 1 minute. Maybe there's more action. It's just slowly moving up. So basically what the candles do is, let me get a drawing thing. It just likes to go up and down. So for a moment it's gonna be like this, then it's gonna go up here, then maybe it's gonna decrease down to here, down to there, but it's gonna spike up here, and then maybe it's gonna spike downwards. So what this is saying is that let's look at a good one. Extreme. What these stuff are saying is that this is like where price has been. So that means this moved up all the way here maximum, and then it came down to here and finished here. Okay, and the lowest is down here. So this is the highest the price has been. So let me get the drawing thing again. This is the highest price has been right here. Right there, this is the highest it's been, and right here is the lowest it's been. Okay, so that gives us a lot of information. Later on in the intermediate section, I'll show you how to take advantage of these wicks and the body. But like how to figure out some information from it. But if we look at it right now, that's the gist of it. So this is like its close, the body's its close, and this is how high it went or how low it went. And if yeah, that's really it. There's nothing more into it. If I'm leaving stuff out, feel free to drop it in the comment section, because it's like, not only are you gonna help me, because maybe I just don't know something yet, you're gonna help me learn, but you're gonna help other people learn. So you see that spike? That spike is what I mean. See how it's moving up? This is the lowest it's been, and it's spiked up to here. It's moving up. Now if this goes down, there's gonna be a stick to represent how high it went. It's very interesting, and I'm sorry I keep like flinching. It's like I have like fucking tics sometimes. Yeah, that's it. Wait, let me open up Notion real quick, because there's some stuff I have to talk about. Okay, so now let's talk about trends. Alrighty. Oh, what? Bro, imagine I actually entered this trade. What the fuck? Hold up. Okay, well listen. let's go to talk about what trends are. Let me just delete this stuff. Oh, okay. So a trend is the direction that the market's moving. So if we look at, like, let's say the daily, we could see that it's going down. Okay, here it went up. So over here it went up like that. Now it's going down, right? That's something you can already tell. Like, see, if you look at it in this section or this format, it's going up, now it's going down. Okay, so how do we figure out these trends? Because of course, if you know what the trends are, and like over here you've realized that, hey, we're going up, and you said that we're gonna go up, and you just held your money up till the peak, you're gonna make a lot, right? So how do you figure out which way the trends are going? The first thing we have to know is, like, what classifies a trend. If we look at this stuff, let me do it here. It's usually going up, making like a high point, going down, making like a low, going up, making a higher high, making a higher low, higher high, higher low, higher high. Okay, so it's going up and down, zigzaggy. We look over here, kind of zigzaggy, right? Higher low, higher high. So that's basically what a trend is. It's going higher high, higher low, higher high, higher low. That's for uptrend. And for downtrend, lower low, lower high, lower low, lower high, lower low, lower high, lower low. See how for it to go considered to be uptrend, it has to beat this right here. Drew a line. Do you see? It has to beat that line for it to be continue going upwards. So even here too, it has to beat this line. I just drew a line. It has to beat that high for it to continue to go upwards, and it beat that high to continue to go upwards. Here, it went lower than that low to continue going downwards. Then this went lower to continue downwards. So how can we use this, like what I just showed you, to our advantage? Well, imagine it was going to try to beat this high, but and it beat it first time, but then the second time it went like this. Okay, so here is going upwards, and then what it was supposed to do was go down and then go up and then just continue beating that high. But what happened is it went lower. It went lower than this low. That's called a break of structure. Okay, so that means that price might start going downwards again, right? But you shouldn't base your trades on this alone. You need other factors to include. You shouldn't base your trades off of these stuff alone, because you're low-key gonna get cooked by the market makers. Okay, like, that's called being a retail trader. So we see this, and it broke the low, and it just continued going down. So where can we see that in the market? Well, that's everywhere. Look, okay, I'll just, to make it easier, higher high, higher low. Let me actually higher low key, higher high, higher low, higher high, higher low, higher high. And then do you see how it's trying to beat, like, trying to go up, but instead it broke through that low. So this is the low now, and it went lower than that. That is a break of structure. It broke structure at this point. So we can consider, or we can we can consider that it might start going downwards. And yeah, it kind of boosted up a bit, retraced into it, and it just continued going down. It broke the structure, so it continued the trend. Here, I'm trying to find like a good visual example. here, it was supposed to go low. So this is what the trend was supposed to be. Lower, and then kind of go up a bit, and then down, and then up and down. That's what I was just trying to do. But what happened is, when it went up, and it went up, and it went down, the next move beat the high. So now it's going to continue going up. This is kind of a bit yap. So I hope you guys actually understand what I'm trying to say, or what I'm trying to communicate. If you don't, let me know. Yeah, so basically that's a break of structure. And then change your characters, like if it just completely, oh, what the flip? Change your characters is like if it changes character, so it's like it's going up, and then you just see out of suddenly just like a sharp downwards, right? It's intuitive. Okay, so where am I looking at the charts? Okay, now you guys are wondering, how am I seeing the stock market? And this is not the stock market, this is Euro USD. How am I seeing this? Okay, so the way I'm seeing it is on a website called TradingView. I went out to TradingView, tradingview.com. I'll have it linked in the description if you guys want. But you guys come onto here and you'll see the stuff. Now, yours will look a little different than mine. Okay, first of all, I think most likely you guys will have like some, I think you guys are gonna have like, where is it? It's gonna have like a watermark most likely. So how do you get rid of that? You go into the settings here, click watermark, remove it. Or if you're a weirdo, you can keep it on. But I don't like it, okay? So I'll just remove it. You guys are gonna, if you want the same colors as me, just copy this. Okay, well, what I want you guys to do now is click this button, this down arrow, and start. See how you start and it just pops up like in the corner right there? I want you guys to start these ones. I'll give you guys a moment here. Okay, a moment's done. So just start all of these, and basically what this is it's a time frame. Yeah, I'll go into that later. So this is a time frame. So now go there. Now go into here and start what I have. Okay, you guys got it? Okay. Now go into here, start what I have. You guys got it? Okay. Go into here, start what I have. Okay. And yeah, that's all that's necessary, I think. Here I'll go over the tools. So the first thing you guys started was this. Okay, this line, it just could be used to signify levels. Like I'll just place it here because this is a high. And like, okay, if price breaks this, it's gonna go up. You know what I'm saying? You just signify areas. This box could be used to mark out FVGs, which I'll get into later. Order blocks, so on and so forth. This tells you this right here. See how I have this green box and this red box? This signifies my trade. So green is where you're expecting it to go. Red is where you don't want it to go. Okay, so this is kind of so you can visualize your trade. On your broker app, you can set up stop losses and take profits. What that means is that after it passes a certain point, price, if this price right here moves up and it passes like this green box, I can set up a thing that will automatically close the trade and I take the profits. And the reason why you do this is because you don't want it to touch it, go where you want it to go, and then you're not looking 1 second and it goes down. Okay, it's just to kind of compensate for the human greed. You can set up a stop loss, which is intuitive. If it goes below this red box, it automatically stops. How much time was this? 20 minutes, okay. So, yeah, stop losses, take profits, that's what that is. This is just text. You can like write what you're looking at. So this is to path, I don't know. You guys don't even need this actually. So uncheck the. Oh wait, I didn't even show you guys this part. So go here and copy this. These are where the rectangles. You don't need the path or the circle. I just have it because I make content and I like to visualize stuff or show them. This is a trend line. You can use it for two things. You can use it to draw the general trend. So let's say we go into 1 minute. And I have like a trend right here, right? See how it broke structure from here. It broke structure from here and continue going upwards. So what you could do is you could draw a trend line to signify the way it's moving. So yeah, you can either put on the wicks or put on the bodies, whatever gets you the most touches. Okay, boom, boom, boom. Yeah, it's just visualization. Some people use it to trade. I don't use it to trade, but yeah. So this is this Fibonacci. No, that's not the grand box. It's not gonna look similar to mine. So here, I'll go settings. Just copy this. What you can use this for, or what I use it for, is to find equilibrium. So I'll get into that later, actually. Not right now, but just you guys got it. And this is my Fibonacci sequence. You can use this to find OTEs, optimal trade entries. You can use these for take profits too, like figure out where to put the end of the green box. Okay, so I'll go into that later too. Yours is not going to look like mine at all. Copy these settings. Okay, so what else do we have? Oh yeah, let's talk about time frames. I shouldn't have left this for a little bit till late. So all these numbers here, it signifies a time frame, and what that means is how long does it take for one candle to form. Okay, so here it tells you 1 minute left. So each candle here represents 5 minutes because we're on the 5 minute time frame. Each candle represents 5 minutes. Here, each candle will represent 1 minute. You guys probably could tell what each candle represents here. Okay, so the crazy thing is, they all correlate. Okay, so if you go into the 5 minute, how much minutes are in, how much 5 minutes are in 30 minutes? 6. So if you go to the 6 candles, 1, 2, 3, 4, 5, 6, we can deduce that the 30-minute candle is probably going to be from here to here, okay? We can just deduce that because it's 6 candles, 6 5-minute candles. If we go into the 30-minute, where the flip is it? What? Okay, but you guys get the point. If we go into the 15 minutes, 2 of them is a 30-minute, okay? And if we go into 30-minute, 1 is a 30-minute. Okay. Are we getting this? Yeah, if I take 2 of them. Here. So the 30 minutes over. And now in the next, after, see how it just closed and a new one's starting to form? In the next 30 minutes, it's gonna make another candle. That's it for the beginner section. I hope I articulated things well and you guys understood. Oh, and what time frames to use? Okay, wait. Basically what I do is I go onto the daily. The daily tells you the general trend. Okay, so we're in a downtrend right now. This is the general trend. So today it's looking like it's green. So what I'll do is I'll look for longs potentially. Okay, 1 hour, as TGR says, is daddy. So if you see a liquidity sweep, which I'll get into later, or you see any sort of thing on the 1 hour, is daddy. You gotta look for. You gotta do some shit to it, right? You gotta use it. let's take a look at and then what I do after is most of my time is on the 5 minutes, 15 minutes, and 1 minute. So 5 minute, I just look at the market, see the way it's going. What's happening, bro? This trade is going, it's gonna hit my TP, bro. But too bad I didn't put an actual trade. So 5 minute, 15 minute is just to watch it. 5 minutes and 15 minutes, and 1 minute, I go into here to get an entry. Entry is when you go into the trade. Okay, I gotta wrap this up. 25 minutes. So entry is when you go into the trade. I do it in the 1 minute because it's more precise. So when I'm thinking like, oh, it has to reach like a certain point for me to put in my trade, I'm gonna look at the 1 minute because it's more precise. It's just a little movements, a little one by one, and I'll put in the trade. Okay, because longer it is, let's say it's like, you're not gonna want to put in a trade based off of like 30 minute because it's gonna take a while for it to close, right? So you can use the 30 minutes to figure out what trade you're gonna do, if you're gonna go up or down, but you're not gonna want to wait for 30 minutes for it to close into like a section and then put in the trade, right? You're not gonna want to do that. So you hop into the 1 minute. You can also use the 5 minute, but 1 minute is gonna give you quicker entries. But also what you guys gotta know is higher time frames hold more power. So yes, 1 minute will give you quicker entries, but 5 minute and like the higher it is, it's gonna be more, I guess, solidified. The thing is, you're gonna lose a lot of money too. So it's solidified, and the trend on the daily is always gonna beat the trend on the 1 minute. Okay, so if on the daily it's saying that it's going up, or let's say on the hourly it's saying that it's going up, but on the 1 minute it's going down, put your trust into the 1 hour because higher time frames hold more power. Okay, that's all for this section of the video. I'm gonna go into the intermediate section. I'm probably gonna take a break right now. Also, by the way, join the Discord. Okay, I'm gonna promote this in every single section. Join the Discord. Anywho, 27 minutes. Frick. I see ya. Okay, so now we're moving up to the intermediate section. Let's get onto the chart. There's something funny that actually happened. Wait. Alrighty, so remember the little test example I made using the sigma? Wait. Yeah, with the thing. Yeah, it hit my TP. I don't even know, bro. I just plopped it down. I didn't even look at anything. So basically, now let's get into FVGs, liquidity sweeps, and what else? Order blocks and daily time frames. Alrighty. So let's start up with the daily buys. Let's start with the daily buys. So are you gonna go long or short today? That's the question. Are you looking for longs or shorts? Pretty simple. You hop onto the daily chart. You see the general trend of you go onto the 1 hour, my bad. You see the general trend of how it's going. If it broke structure to the downside, like right here, you know you're looking for sells. Okay. Broke structure to the upside, we're looking for buys. Okay. Pretty simple. Yeah, that's it really. So now let's talk about FEGs, liquidity sweeps. Sorry, chat. I just came from the gym. I'm really tired. Anywho, so an FEG, let me mark it out for you. Do you see why this is an FEG? What's different about this than anything else? Well, let's look at something that's not an FEG. Do you see how all the wicks just overlap with each other? There's no gap. It just overlaps. But then something like this has a gap in it. The bottom wick doesn't match with the top. So let's look at this one. it's basically 3 consecutive candles where the bottom wick, where the top wick and the bottom wick just don't merge, and it creates this gap in the market. It happens from like really strong movements like that displaces stuff. So everything else usually just merges within. It just merges up together. But sometimes it doesn't. And then here's another FVG. Let's just go over the stuff and just mark out some FVGs. Here's a really tiny FVG. Okay, I'm like rushing through it. I can't find anything else. This one right here too. So FVG stands for fair value gap. Now, that's cool and all. When I heard this for the first time, I was thinking to myself, wait, can you guys see? Oh no, you can't. My webcam's kind of blocking it. I like something popped up. So when I first saw this, I was like, okay, that's cool and all, but why do I need this? There's no benefit to seeing a gap in the market. Well, actually there is. So if we look into the gaps, what happens a lot of the time, or most of the time, of course there's some areas where it doesn't occur, but price usually retraces back into it and it continues its general direction. So it's going up. The FVG was created on a green candle, so when it dropped into it, it continued upwards. Today on Nasdaq, there's a crazy trade. So this is a trade I took today. If we hop on to the 1 hour, there's an FVG right here. Okay, do you see how there's a gap? And then price retraced into it, and it is going up now. Do you see that? Even here, price retraced into it. Even though it's one candle, it came back in, it blasted off. Came back in, it blasted off. If I was on the markets when I saw this, I'd be thinking about potential longs. Okay, so yeah, that's what happens. It goes in and it blasts off. So there's that, and sometimes it invalidates it. So let's find one that's invalidated. Okay, right here. There's an FVG right here. This technically was supposed to come in and blast off, but it didn't. It came in, it invalidated this FVG and another one below it too. Came in and it didn't blast off. Do you get what I'm saying? Or the same thing could happen with shorts. Let's say over here. Technically right here, when price came in, it should have went down, but it didn't. So it's an invalidated FVG. Here too. When price came in. Actually, no, this one did get accepted. Price came into the FVG, bounced off a bit, went back in, and then went down. You can see why this is going to be beneficial to your trading. And this is why it's in the intermediate section. Not a lot of people can see this stuff. Yeah, literally that's all about FVGs. It gets invalidated, it continues, and price is drawn to it. Okay, most of the price is trying to fill it up because it's a gap in the market. Sometimes it can't because it's a key level. So that's why you have to be careful with it. And have other confluences. So don't only rely on one of the stuff I'm going to teach you. The next thing is liquidity sweeps. So this is literally the reason why I took this trade today. If we hop over to If I hop over to the 1 hour on the Nasdaq. Okay, first of all, there's an FVG right here, and that's one of my reasons why I took this trade. Like, let me break this trade down for you. So what I did is I marked out all the highs. These are zones of liquidities. So I made a video about this before, but think about it. When someone like takes a short here, like when the retail traders, when they see this is starting to go down, most of them put their stop losses here. So when they do this, they have it like this at the high and wherever their take profit is, right? So what happens is market makers, people that run the market, they want to take out the liquidity. So technically what would happen is the price would come retrace back into the zone right here that I drew the line on, retrace into it, and then wick down. And do you see how aggressive those wicks are? Just long, like strands of noodles. Okay, it's like it comes in and it goes down. So where are liquidities? Liquidity is easy to find. Okay, all you really have to do is take your little thing here that I told you guys at the intro, and then mark out all the highs. Okay, just mark out. Okay, that can't be swept, but just mark out all the like prominent highs. Like, you know what I'm saying? It's just like prominent highs, blah blah blah. Those are all the stuff that can be swept, right? And if it doesn't sweep it, then it doesn't sweep it. But most likely, it'll sweep in a continuous direction, right? So usually, this is something I learned over time. I don't know if there's any like proper correlation, but from what I've seen, is that if it happens on a higher time frame, like the 1 hour mostly, it's just gonna continue it. So if we look at the 1 hour here, it swept this low, and it continued, and it went up. It swept the low and it continues up. So basically, if it sweeps the low, it's gonna go up, and if it sweeps the high, it's gonna go down. Just go onto the markets and then look for some examples yourself. Okay, just go through it, find some examples yourself. Right here's another one. Just a little sweep, and this is like me just rushing through it. Like, if you took some time, you could find probably a lot more examples, because it happens on many areas too. Like, for example, right here, I think that's a black one. Yeah, that's literally a sweep too. That's a low. That swept it, went up. You can do that for highs as well. Sweep right here, and it goes down, and it sweeps, and it sweeps that, and it goes up. Yeah, it's pretty easy. If you see the sweep, then you know you should go for it. A mistake I made on today's trade, though, let me bring it. Where am I, bro? What? I'm back, bro. Okay, so a mistake I made on today's trade is when you see that sweep, don't just rely on it to actually follow through. So when I saw the sweep originally, I saw it go down and I was thinking shorts, and I put in a short and it stopped me out. Okay, so I said short here and it stopped me out. And then I thought to myself, okay, maybe, yeah, it stopped me out here. I thought to myself, okay, I have to go into the 5 minutes and wait for a break of structure. So, like I taught you guys before, what you have to use is the break of structures as well in your trades. So before I just placed the trade right here and it blasted off, what I should have done is waited till there's confirmation, till it broke structure, right? Till it broke structure, it closed below the low, right? It's like, here's the break of structure in this area. It broke structure. That's when I should have placed my short. Less liquidity sweeps. So I did all that. Order blocks, pretty simple. It's from what I recall, it's areas where there's extreme movements upward or downward. So over here, you see how it switched direction? This would be basically an order block. Boom, it went down. Technically, what happens in order blocks is it works kind of like an FVG. It would have to go down and then up and reverse, but when it doesn't, it's classified as a breaker block. And what I usually do is then I set it up as a way of kind of like support and resistance. It goes down, up, it touches into it, and it goes up in that way. Pretty easy stuff here. I'm trying to keep the section short because the last one was 30 minutes long. So, or like 26 minutes long. So I'll keep it short. Join the Discord. Join the Discord. Join the Discord. Join the Discord. It's free. 100% free. We talk about trades every single day. I don't have anything paid for. Literally free. We drop our biases and everything. Profits. Here, people are dropping their profits. Just join. It's free. I don't know why you wouldn't join. Yeah, I'm a little tired. I'm gonna go get some food. See ya. If you guys made it this far, congratulations. You guys have a lot of discipline. I fuck with it, and you guys are already ahead of everybody else, right? That fucking like stop watching, right? I'm a little bit tired right now. I was like fucking working on shit all day, and yeah, but I'm like, I gotta finish this video at least, right? So let's hop onto the charts. Ah, fuck. Okay, so I saved this right here because I want to show you guys something. Basically what I want you guys to do is wait. What the? How? How did this happen? Oh, there's like a candlestick right there. Okay, basically what I want you guys to do is understand that trading, it doesn't always work out. Even though there's a lot of confluences, it doesn't work out, right? So what we're gonna do is we're gonna take the intermediate section and then mix it all together. But before I do, I want you guys to go over here. So go on to Forex Factory and then click the calendar part. I want you guys to check this every single day before you trade. Okay? Make sure that there's no news. I mean, not no news. Make sure that you are aware of the news, right? So basically, red is like high impact. There's probably going to be a lot of movement. What's it called? Yellow is low impact. Orange is medium impact, right? And gray is no impact. Like, it's like not economic. It's usually for bank holidays. So yeah, check this out. In my Discord server, I have like a free sauce section. Can you see that? Right here. So basically, I have a free sauce section. You go into here. Literally, a lot of stuff like free. I basically explain like what these stuff are, like what the economic stuff is, how to journal, blah, blah, blah. I just drop a bunch of free stuff. I have like a free replay system, so you guys could check your trades too. So yeah, make sure you join. So what I want to teach you guys is knowing how to mix confluences, right? So let me show you guys like a trade that me and like people on my Discord server took. This trade, basically take what I taught you guys in the previous section and just mix it all together, right? The more confluences you have and like the more reasons you have to trade, the better it is, right? So first thing we do is go into the 4 hour and the 1 hour and find the daily bias, right? Find out what's happening today. 1 hour's daddy. I was looking here. It was looking like we should go for shorts, right? So I hop onto the 4 hour. I mark out this fair value gap right here, right? So there's a liquidity zone right here. I told you guys about this. It's gonna sweep and go down. Liquidity zone right there, right? So the reason why this is a very good liquidity zone, a very high probability liquidity zone, is because it's within the FVG. And if it's within the FVG or a little bit below an FVG, it's a high probability liquidity zone. If you hop into the 1 hour, the FVG is more up towards here. That's fine, DC, but it's still below it, just a bit below it. So it's gonna work, right? So what we did is we hopped over here on the 1 hour. We found a general bias. We're looking for shorts. We see this liquidity sweep. You wait for a movement. And then you hop onto the 5 minutes. You wait for a break of structure. and you trade off the break of structure and put your stops at the previous lows. Okay, and the reason why you put it at previous lows is because it could sweep you the same way that we got this entry because of a liquidity sweep. A liquidity sweep could also take you out. So place your stops at prominent lows. I mean, place your TPs at prominent lows. Another good TP would have been here, right? Another good one would have been here. But I was monitoring the trade and I just ran it down to here. And I just closed right away because I don't want to get too greedy, right? And look, we don't know. Maybe it's going to go down towards here too and I missed out on some pips, right? You don't know that, but it's better not to be greedy, right? I'll take this one to two basically, right? I'll take it. That worked. That trade worked. This trade worked as well. So let's look into it. Stop into the 1 hour. One hour is daddy. We see fair value gap, right? FVG on the 1 hour. We see a downtrend on the 1 hour. And we see a liquidity zone that's within the FVG. It sweeps, we place our TPs at the low, and we place our stop losses just a bit above the sweep. Okay, hop onto the 5 minutes, wait for a break of structure, enter. That simple, we hit another trade. Do you see how some people overcomplicate it? Literally, what I realize is like the more messy your screen is and the more fuck shit you have on this, the more indicators you have on this, the fucking SMA, right? This thingy-mabobber. I used to have these stuff, right? In my past videos I had these stuff. Probably in the past sections I had these stuff. But I'm learning while you guys are, and it's basically gibberish. It messes up your trades, right? The only one I would recommend having is the FVG one. Just in case you guys are like not paying attention, it will literally just spot out where the FVGs are. Right? So I recommend doing that. But look, I'm not gonna feed you guys bullshit and tell you that the strategy works 100% of the time. I'm not gonna feed you the bullshit and tell you that I'm like the fucking best trader in the world, right? Because I'm not. I'm not the best trader in the world. If I was the best trader in the world, I would be selling you guys a fucking like mentorship, right? That's the goal and plan. But I'm not the best yet. So look at this, right? It's the end plan to be the best. Look at this. Hop onto the 1 hour. 1 hour is daddy. We see downtrend. Okay, like liquidity sweeps usually let you fucking hit shorts. Okay, most of the time it lets you hit shorts. Unless you like find like a sweep in the high, right? But most of the time, it's a short. Oh, look, we have an FVG right here. It's not filled, right? There's a liquidity zone, a prominent high below the FVG. It sweeps. Technically, it should go short. You wait for the break of structure on the 5 minutes. It broke structure. You place down the short. Did it break structure? Yeah, it broke structure here. So I placed it too early. That's my fault. I should have been patient. But still, technically this should have hit, right? According to the formula, this should have hit. But it didn't. Because some stuff happens. You know, if it was one copy and paste formula that got you 100% win rates, everybody would be fucking rich, right? Everybody would be rich. But some stuff don't happen. Maybe I missed something. Maybe I didn't check the news, right? I mean, I did check the news, but like I don't even know why I didn't hit, but trading doesn't hit 100% of the time. I gotta fucking yap for another 10 minutes because I want this video to be 1 hour, right? So let's do some, let's look for some examples, okay? I think that would be a good way to pass some time, right, guys? Right, guys? Right. All right. Look, like I'm legally gonna close my eyes, fucking, so I'm not cherry picking. Okay, I'll stop. Oh, see, this is how you know how my eyes goes. Okay, I'll stop here. Right. Okay. Whatever. I'll go here. 1 hour is daddy, right? So mark out some FEGs. One FEG here. Another one there. Okay. So we could mark out prominent highs, right? So this FEG was actually filled with the high. So this won't be a high probability liquidity sweep. Okay. This won't be a high probability liquidity sweep. But what will is this high. This high will be a high probability liquidity sweep because it wasn't filled. Right? So let's draw it out properly. This FEG wasn't filled and the high is within the FEG. So it's a high probability liquidity sweep. You could place your line here and you see it swept it. Maybe it's not as clean as like the previous ones, but it did sweep it, right? So I would place a short here from a break of structure, target the lows. So this would have been my trade. It's not as sexy because like right now we have like the ability to have the foresight, right? I'm able to see how the trade would have turned out, like how far it would have went down. But I'll be completely honest, this would have been my trade, right? I wouldn't have went all the way. This would have been my trade. This is a pretty good trade still, right? You just target the lows. Look, there's an FEG here as well. Right? And it wasn't filled before this high. So, and this high is just a bit below the FEG, like I said. So, this is a liquidity sweep. This would be a high probability liquidity sweep. So, what happened was it swept this liquidity. It also touched into the FEG, right? So, we can assume that it's going to continue downwards because 1 hour is telling us that's a downtrend. Actually broke structure, but it swept liquidity and the overall trend was down either way. We take our short position. I'm assuming the break of structure would be around here. I'm not gonna go all the way and check. My take profit would be here. Okay, this is a lot better than the other one, but see, I'm not gonna lie to you guys and say I would have taken profit here. What I would have done probably is taken profit here and had runners in these sections, in these prominent lows. So this is my first take profit. I've had another one here, another one there, right, then draw, another one there, another one here. I would have had these. This would have been the trade I would have taken. Okay, I don't even know my hand's fucking up. Like I'm just like chilling with my hand up. Imagine my audio is not even fucking recording this whole time. I've said a lot of F words in this thing. I don't even know why. I don't usually swear that much. I don't know. Maybe it's like a persona I'm putting up. This is not me, guys. Yeah, it's not me. That's one trade I would have taken. Okay. Let's find a trade that wouldn't would have followed it, but it didn't hit. So I think this one. No, this one hits as well. Actually no. It didn't sweep it. Where did it sweep? Yeah, see this one wouldn't have hit. So thing. I placed down my high here. It's below FEG, so it's prominent high. It swept it, but it didn't occur. Okay, that's one trade that we would have missed. Okay. Here, there's still the FEG from past day. The high. this is a potential sweep, as well as this is a potential sweep, because it's below the FEG. And look, magically it swept that. I replaced the short right here. Stops. Let me take profit. There. 1 to 3. That's a good trade as well. You see here, I would have assumed that it would have swept it and then went downwards. It did, but it would have taken me out before it, what's it called? Before it hit TP. It was probably taking me out already, like right here. Yeah, it would have taken me out. Maybe right here, yeah. I still I've been out. Okay. Let's hop onto the 4 hour, because 4 hour is a lot less candles. So let's see where the next one is. Where's the rest? Wait, let me refresh the page. So maybe this stuff will load in. Okay, well, fuck it. Alright. Let's hop into the 4 hour. Mark out FEG. Right here. A high. Right there. I am going to take a bet and assume that if this sweeps liquidity and breaks stretch on 5 minutes, we could put a trade that's like this. I'm going to bet, because it's literally the formula. It works 100%, not 100% of the time. We've seen that it doesn't work all the time. But yeah, look, and while I'm doing this, I'm learning too, because I'm realizing, bro, I should just stick to the plan. And for this main section of the course, the free course, which people probably would have charged you like thousands of dollars, so I think this deserves a subscribe. What I'm realizing is my main problem is my mentality. I'm scared to lose money. I'm scared to trade, you know. And I jump at it. I don't follow the strategy, right? It's so much simpler. It's simpler than we thought. Okay. Sweep. He's gonna sweep. I think it might have swept like by a pixel actually. Yeah, it did sweep by a pixel. So we're gonna assume that it might go down, right? It might go a little bit up, big structure down, right? And you know, just add a bit of more sauce into the course, because there's still some time left. SMTs could also be used as a way to help trade. So if you have onto the chart, there's correlating pairs, right? GU, Euro USD, and GDP USD correlate, right? The same thing could go for Nasdaq and Q and EQ. Those correlate as well. So look at them and then just watch for diversions, right? So basically, let's go here, because there's a lot of SMTs in these trades. So if we hop over to here, see if I can spot one. To be honest, I'm too lazy to look for it. the time's already getting finished too, so fuck you guys, you have to learn that yourself. But let's search up SMT divergence. Basically, if Nasdaq is going down, but EQ is going up, right? SPX is going up, but Nasdaq is going down. That's SMT, because they correlate to each other. Right, let me zoom in on my face to make this more intriguing. Nasdaq and SPX correlate. Okay, NQ and EQ correlate. If one's going down and the other one's going up, even if it's just on a 5-minute, that's an SMT. Okay, you could use that for your bias. The same goes for Euro USD and GDP USD. They correlate. If one makes a higher high, while the other one makes a lower low, that is an SMT. Do you see? It's literally the same thing. Oh, here's an SMT. Look, this one went down, but this one went up. Do you see? That would have been SMT. And if this was in session hours, and not fucking 11, this could have been a confirmation for your trade. Now, this isn't a pretty SMT. There's usually like better and more defined ones, but just stay focused and look for SMTs, right? What else? Really, that's what I can think of on the top of my head, right? There's nothing more I have to add to this course. Thank you guys for like following the journey. To those that are early subscribers, I appreciate it. To the people that joined the Discord early, I appreciate it. It's gonna be free forever. The Discord. Most likely in the far future, when I get better at trading, I might make like a group call thing. Basically, on my Discord, I just drop like free, like just biases, and I just like drop knowledge so I can start like teaching people as well as like learning. So that's gonna stay for free forever, right? You can't put a price on knowledge. That's my my motto. I don't want to put price on knowledge. That's why I don't like universities. That's why I don't like colleges, because they that's why I don't like paid for courses, because they put a price on knowledge. And I don't like that. So I'm gonna keep everything free forever, right? So I'm gonna keep making educational videos and stuff like that. But if you guys do want like, or when I do get good at trading, like really good, the only thing I would ever do is like a group call. Like you pay monthly to be part of a group call and like receive like, not like signals, but like just kind of like we're gonna be on a call talking with each other, right? It's not gonna be one of those where it's like TGRs, right? Where he's the only one talking. I want to have one where it's like everybody's gonna be able to communicate with each other, and that's why I'm gonna make it paid for. Because if it's free, then it's gonna be like chaos. So, yeah. But to the people that are early to the Discord server, that will be free forever. Okay, so join up early and stay active in the community. Okay, if you stop being active, your rights get revoked. Okay, revoked. So, anywho, thank you guys for watching. I hope you guys found any like knowledge from this. I hope you guys learned. Fuck with the muscles, by the way. Anywho, thank you, and see you. By the way, follow my Instagram.